I wanted to show everyone this part of the system first. This is your profit and loss statement or profit and loss sheet. If you've ever used bookkeeping software or spreadsheet before, this probably looks pretty familiar to you. But there are some key differences that are unique to the Canadian small biz bookkeeping system. I wanted to point them out because I think there's a ton of value in them for you as a small business owner. Also, a quick note that you do not need to fill in any of this by hand. All of this information is being pulled in from other parts of the sheet or calculated for you. This sheet is just a report that provides you with a lot of really good information about how things are going in the business financially speaking, and I would recommend reviewing these numbers regularly. So the top section looks pretty normal, right? We have our income up here, we have our expenses down here, and then we have our net profit or loss. You may have noticed that over here on the right, we have a column called difference versus budgeted amount. What's that about? Part of the system is that you have the ability to set income targets as well as budgets for about what you'd like to spend a month on various business expenses. And it's completely optional. The system still works just fine without it, but it's one of those things that I think adds significant value to the system if you use it. For example, with income targets, if you know that your operating expenses are approximately $500 a month, then you might set yourself an income target for something like $1,800 a month so that you have plenty to cover those operating expenses, put aside some for your income taxes, and still be able to pay yourself a salary. Or you might set yourself an aspirational income target, something that's a little bit of a stretch for you right now, but a goal number that you would like to hit in terms of business revenue. Seeing those budgets and whether or not you have room left in them or not can really help you make decisions and decide where to focus your time and energy. And those are our most limited resources. I know everyone's got busy, full lives. Some people are parents. We don't always have all the time in the world to spend on our business. So this helps us to make sure that we are using the time and energy that we do have in the most effective way. So let's say, for example, that it's June, you're halfway through the year, and you notice that you only have a small amount left in your advertising budget, but the ads that you've been running up to this point haven't really translated into the revenue numbers that you would like to be seeing. Knowing that your current advertising isn't producing at the level that you would like it to is great information to have. You can act on that. Maybe the messaging needs to be changed. Maybe you're advertising in the wrong place. Maybe you're advertising to the wrong people. Maybe the whole strategy needs a change up. The numbers tell a story and can help guide you. Or let's take an example from this sample company. Right now, they are a little bit over budget in their other category because they had purchased a conference ticket that hadn't been planned for. But it seemed like a great opportunity and they couldn't pass it up. No big deal. All they need to do is find the money to cover that overage elsewhere. Some options could include bringing in some extra revenue for a month or two and exceeding their income target. Or maybe they could skim a little bit off the top of some of the other budgets to make up the difference. The point is, having this bird's eye view of your company's financials really helps clarify how things are going versus what you had planned for. And it also helps you navigate decision making on how best to invest your time and money going forward. Now, this net profit or loss line, this is where your typical P&L statement ends, because for most large companies, this is all they really need to know. What came in, what went out, that's it. But for small businesses, this really doesn't give you the full picture. Assuming that you are not incorporated, if you have a net profit, this will be treated as personal income for you, which means that you have to pay personal income tax on it. After you've covered your operating expenses and set aside money for taxes, do you still have enough left over to pay yourself a reasonable salary for the work that you've put in? What about setting up an emergency fund? If you sell products, did you need to purchase inventory this month? What about equipment for the business? Those don't go on a standard P&L because they're expensed differently than other business expenses. That's why I added this section down here that includes everything else that does affect your cash flow, but that isn't typically included on your standard profit and loss sheet. Charitable donations are included because these can be used as a write-off for your personal income taxes, so you'll want to make sure you're tracking them if you are making donations. Quick note that it has to be a registered charity with the Canadian government. We have owner's draw down here to track how much you are paying yourself as a salary for running the business and quite possibly doing all of the things in the business. And while yes, the government considers this number your salary as far as taxes are concerned, I want you to start shifting your mindset to think about this as if you were a larger company. Don't think of this number as your income, think of it as your business's income. And who else does your business still need to pay? Well, you gotta pay the government, no way around that. Do you need to purchase inventory or equipment? Well, you got to pay your suppliers. And if you are self-employed, you absolutely should be paying into an emergency savings account and setting up your own insurance in the event that something happens and you can't work. So after all of that, then what's left over to pay yourself a salary? I find two situations tend to come up in terms of withdrawing a salary for business owners. Number one is that their operating expenses are so high versus their revenue that there just isn't really anything left to pay themselves with at the end of the month. Can't get taxed if you don't have any profit, but also working for free really sucks. The other thing that tends to come up is they just have no concept of what amount they will need to pay for income taxes at the end of the year. So they take all of the money and spend it on personal stuff. And then April rolls around, they get a very unpleasant surprise when they find out they have this chunk of change owing to the government to cover their income taxes, and they don't have any cash to pay it with. And I don't want anyone to work for free or get a nasty surprise in April. So that's why this section is here. So for the sample business, when you just look at the part of the sheet that's typically included in your standard P&L, you might be thinking, oh, hey, everything's going really great. Look at all this profit. However, when you take everything else into account, you can see that they were actually cash flow negative for the first 2 months of the year. And that's not necessarily the end of the world. It doesn't mean that they have failed. It is very normal to have some months that are cash flow negative. You just want to make sure that they aren't all cash flow negative. Ideally, when you get to the end of the year, you want this number right here under the annual total to be very close to zero. And if it's not, again, that's just a piece of information that can help you make decisions moving forward. If you had extra money left over, then maybe you might want to invest more in some of your operating expenses, maybe kick up advertising a little bit. If you are under, okay, maybe we need to look at getting those expenses down a little bit. Or maybe you need to take a little bit less salary for a short amount of time until revenue picks up. And when folks start tracking everything like this and they start seeing some overages down here, they tend to kind of panic a little bit. But let's look at this a little bit more closely. In January, their net profit was a little bit lower than the following months, but that's mostly because they had a big expense up here for accounting. It was paying their accountant for prepping their year-end filing, which is a once-a-year expense. This isn't going to come up again the rest of the year. And if you look at the budget on an annual basis, they actually still have $300 left there. So this amount was planned for, and they're still in good shape overall. What else? Well, there was some inventory purchased and some other expenses that went along with that, with producing their goods to sell. But that now means that they have some finished products that they can put out into the market, and they will likely make that money back over the coming months. So nothing to really worry about there either. They have saved for their emergency fund as well as their income taxes, so they're actually in pretty good standing. I'm assuming that there was savings in the business checking account from last year to be able to cover them taking this amount as their owner's draft. So for me as a bookkeeper, there's no red flags here or any action that needs to be taken. What about next month? We're in the red here too. But that seems to be mostly due to an asset purchase. And those are larger purchases of equipment, furniture, maybe building or renovating a workspace. Larger expenses like this don't get included in your operating expenses because you don't write the full amount off in a single year. It gets portioned out over a few years instead. This is because for larger purchases, such as a new MacBook for your office, you're not going to just use it for 1 year and then toss it out. You're going to use it over several years, so the write-off is also going to get meted out over several years. So again, there's nothing that is immediately worrying or concerning to me as a bookkeeper, even though we do have an overage here, unless this was an unexpected purchase that went on a credit card and they don't have the cash to pay it off right away. They accidentally spilled their coffee on their old laptop while they were working and had to replace it, and they weren't planning for that expense. Now, they have been paying into their emergency savings, so if they had enough in there, they could use the money from that account to cover this purchase, because this would definitely qualify as an emergency. But if not, then I would suggest maybe looking at reducing some of these operating expenses for a month or a couple of months so that they can pay off that credit card as fast as possible and not rack up too much in interest charges. And then we've only got a couple of months worth of sample data added to this sheet so far, but you can see that in the following months, they move back into having a profit again, even when you take everything else into account. So assuming that continues, although they're down a little bit right now, it's not bad. And And as long as they continue having profits later in the year, they're going to be just fine. So I hope all of that helps demonstrate how having a crystal clear picture of your business numbers is just absolutely invaluable to you as a business owner, and how the Canadian small business bookkeeping system specifically can help you with that. There are 2 more sections to the P&L sheet that I will touch on briefly now. This section down here is just what your operating expenses were as a whole rather than broken down by category, and both what was budgeted and what was actually spent is included. So we can see for these couple of months we were over by a bit, but then the following months were actually under budget. As long as we end with a number that's in the green at the end of the year, we're going to be fine. Again, this is kind of zooming out to that more bird's eye view, and I find it helpful if you're seeing red in some categories over here and it's kind of freaking you out. If you take a look down here and be like, well, I've overspent in some areas, but I've clearly pulled it back in others, and generally everything's looking pretty green down here, then you're just fine. And then down here we have the Profit First section. If you haven't heard of Profit First before, it's a framework for business owners of approximately how they should be allocating their business revenue in terms of what percentage should go towards their operating expenses, what should be set aside for taxes, what should go into that emergency fund. That's the profit amount here. That's why in the section up here, I call it profit saved rather than emergency fund or something like that. And then also approximately how much you should be paying yourself as the business owner. And the numbers vary depending on what level your business is at, like what your amount of revenue is overall annually. But I'm not going to go fully into the system yet. I will have another video that goes more in depth on that if you're interested. I think it's a really great system for business owners, and I wish I'd known about it in the beginning. But for our purposes right now, if you were wondering how to get those numbers for what you should be putting towards your owner's draw, amount to save for taxes, the profit saved, as well as approximately what your monthly operating expenses budget should be overall, this is where we're getting those numbers from. If you have any questions at all about this sheet, how to read it, how to use it, how to interpret the information that it is giving you, please send me an email and ask. Folks bringing me questions helps me make the product better and provide content that explains concepts better, whether it's how to use the sheet or just bookkeeping in general. It is really valuable to me to know where the sticking points are for people. I had to figure out a lot of things the hard way back when I started, and I'd really like to help people avoid that. So now that you have an overview of how the profit and loss sheet works and how it can help you, it's time to start adding your business's transactions to the system and seeing what your business numbers look like. To do that, we're going to move on to the monthly overview sheets. They are where you're going to do the bulk of your work in the system.